All right, the market's seesawing today, coming off of record highs at some points, even after strong signs that the consumer is alive and well, still spending despite rising prices. Earnings beats by Coca-Cola and McDonald's helping to lift the consumer discretionaries, and at one point the Dow Jones Industrial Average. Then you have Microsoft and Google also posting strong numbers, lifting the tech sector. But is the lack of a broad upside today a concern? We put that question to Phil Blancato and Eva Agi. Thanks for joining us. Eva, let me start with you. October seeing the biggest gains since last November. Are investors now just waiting on a bigger pullback to put money in? I mean, now the Dow's down a big 70 points.
Well, first of all, Lauren, thank you so much for having me. I really do believe that a lot of investors have a ton of cash on the sidelines, and the market has rebounded so much. It's really a question of when can they get into this game?
When? When, Phil?
When I would agree completely. The reality is we saw what we expected, September into early October being relatively volatile. But this is your opportunity, and I think investors will start piling in when they hear these euphoric numbers around fourth quarter, the spending that's to come, the $3 trillion is making its way into the market for the fourth quarter and first quarter of next year. It's the liftoff we've been waiting for, and investors should take advantage of it right now. We'll probably get another 3-4% here on the S&P through the end of the year.
You both agree that the market stays strong through year end. The so-called Santa Claus rally, if you will, holds despite inflation and some other concerns and dysfunction in Washington. But look into the crystal ball, Eva. What do you see for the first quarter, if not the first half of 2022?
Well, I think what's really interesting here is a lot of issues we're dealing with right now and preparing for, such as supply chain concerns, inflation. They're priced into the market, in my opinion. So supply chain concerns, we're going to see companies preparing for that earlier rather than later. I actually see that alleviating. I see consumer spending and sentiment really strong. And because they have so much cash on the sidelines, they're going to be looking for an in. They're going to be wanting to spend that cash. And I think that's really positive for earnings in the market.
Okay, I haven't heard that before, that you think these higher prices, this inflation's already baked in. We have earnings that have supported the rally thus far, and earnings beating 8 and 10 companies that have reported so far. Phil, they've beaten on the top and the bottom line. That's pretty good. Tonight we get Apple, we get Amazon, we get Starbucks. It's tomorrow we get those. Starbucks also. You know, if not earnings, what could be the next catalyst for the stock market? And I'm asking that because I'm looking at a market that's struggling a little bit today after we got really great earnings from so many big companies, particularly in the tech space.
I think catalyst is a big word. What you're facing now is the Fed is going to begin to reduce its buying of the market, and that's going to send shockwaves through the bond market and the equity market. Now, I don't totally agree that the inflation is completely baked in either. So this ebb and flow is going to give you an opportunity to buy the dips, but you will see some numbers coming out of the fourth quarter from an earnings standpoint that are better than we expect. Delta pulled forward growth, and that's your catalyst. The catalyst being the spending that didn't happen in the third quarter will happen in the fourth and the first. Remember, we're going to go from 6% GDP growth the fourth quarter to probably 2% by the fourth quarter of next year. So that process of slowing down, it's going to be actually quite painful for the market. So you need to have balance in your account to reflect that. It's critical important right now that you have both consumer discretionary and tech. And if you don't, you need to find balance because of that, the volatility that's become.
And what's going to help fuel this end of the year growth and this rally, Eva, is the consumer. The National Retail Federation put out some numbers this morning, and they say we're going to spend the most on holiday gifts ever in history, up as much as 10.5% of the increase from Christmas of 2020. And you see numbers like that, $859 billion. You just, I mean, that's eye-popping. Is that confidence that this all continues, or do you agree with Phil and you start to pare down and take money off the table at the start of 22?
If you think about, like, anecdotally, what happened last year, Christmas season, no one was able to go out as much as they are. And this is just like the pent-up demand really realizing itself. So is it confident? I would say yes, it is for this season specifically. In the future, the market's going to have an issue where we had so much tremendous growth from this year relative to last year. Now, what's going to happen in 2022? That's the question that investors want to get behind and really understand in light of earnings. What's the forward-looking prognosis?
Yeah, and we were just showing a board of the traditional brick and mortar retailers and now some of the online shopping sites. And I don't know if they believe this prediction that we're getting from the NRF. Phil, Eva, thanks for the time today. We do appreciate it.
Thank you.